Hey, what's going on, man? How you doing?
Ladies and gentlemen, good morning, y'all. How y'all doing? Y'all doing well this morning?
Yeah, I'm good, man. I think I'm good.
You good. You're good. You're excellent.
Perspective.
Yeah.
It depends on how you look at it, right?
Hey, man, Ed just jumped right in here, man. So ladies and gentlemen,
It's 9 o'clock.
I like to hear our intro. Our intro, for me, it just gets us going, man. I done heard it a dozen trillion times. Hell, we created it, right?
Right.
But Ed he hit the button. Y'all ready? So this is live. This is what we do and all the good stuff. But good morning, everybody. Happy Sunday.
Happy Sunday, man. It's getting cold.
Yeah, I woke up a little chilly this morning, man.
Yeah.
It felt good though.
But you prepared. You got the hat on and everything.
Oh yeah.
I got my scully on.
My hair. I'm having a challenge hair day, so you just put the scully on and keep it going. That's what I like about the wintertime. You can put them layers on.
Well, at least you got hair.
Oh, okay.
You know mine left at like age 28, man.
28?
So it left me. I didn't leave it. It left me.
It left you.
Exactly.
Perspective.
So that's what we're going to talk about today. We're going to talk about, there's a lot of noise in the industry. I know we've been talking about that. Mm-hmm. But what I believe personally, that life in general is about perspective.
Yeah.
It's about how you look at it, right?
Right.
I was talking to my wife. And we were talking about when I got laid off on my job. Mm-hmm. You remember you said you didn't even know I had a full-time job? It was a full-time job.
I thought real estate was it.
It was not. Mm-hmm. It was not. I was working for a company for 20 years.
Right.
And it was around this time of year in 2016? Right before Christmas. Mm-hmm. So my manager at the time caught me in the parking lot. Mm-hmm. And he was like, hey, come here for a second. And I was like, hey, what's going on? He was like, your job, I just want to let you know, give you a heads up, as of the beginning of this year, your role that you're in now is going to be discontinued. So that means you can work for us, but you'll be working in a lesser role.
Right.
So to make a long story short, I couldn't believe that, that it was coming to an end because, my family was dependent on this money and this income.
Correct.
So I just had to, I was disheartened a lot, but my perspective after I got out of my feelings had to change in order for me to go to the next step. So it was all about timing. I looked at it and I was like, I can either fall and just let everything go, or I can pour everything into my real estate and go hard with that. It'll give me more time to work with my clients and for me to build my business. Fast forward into now, we have 20 agents, licensed in 4 states. We've done a number of transactions. We put a lot more people in the homes, but I've had more time to grow my business and to spend time with my family and just, I don't know, it's just a whole nother life that was developed outside of that. It could have went another, if I would have looked at it a different way, mm-hmm. I could have lost it all because it hurts. It was right before Christmas.
Yeah.
I can't say that I didn't kind of feel like something was going to happen.
Right.
But, it was all about perspective and faith. And that's what I want to talk about in terms of the real estate market. With the interest rates going up, I know we spoke a couple of weeks ago about, money's just being flipped to another bucket. So instead of paying highest and best, going $10,000, $20,000 over asking price, that money may come in the form of you putting money down toward discount points or a rate buy down or something like that.
Right.
Since the market is not as hot as it was for buyers. Mm-hmm. Now you don't have highest and best. Now sellers are more willing to pay closing costs, whereas before, they wouldn't even, the listing agent wouldn't even return your call most of the times. You know what I'm saying? Mm-hmm. So it was certain loan products that they just would not accept sometimes. So if you had NACA, you had different programs, they just wouldn't even, they would look at it and they had to deliver that to their client, but a lot of times they wouldn't accept it. So to me, it's all about perspective in life and how you look at things. And that's how you can get through them, by perspective.
Yeah. So perspective is when healthy, it can be operated in a good space, right? and not know so much do you worry about, what's happening around you or what's happening to you. You kind of flip it and say, well, what can I help? What's going to happen through me, right? So instead of what's happening to me or around me, is what can happen through me. And I applaud you with having a different lens on during the trauma of losing a job. Losing a job's not fun. I don't care who you are. I don't care if this is your part-time job, your second job, first job, whatever. I don't care if it's a job that you don't want to go to every day. When somebody tells you your service is no longer needed here, that doesn't feel good. So I mean, you gotta kind of go within and see exactly how can I what's the next plan and what's going to happen. What can I do to alleviate some of the stress or some of the the now the income that I didn't have anymore. You dove right into real estate, right? You said, okay, real estate. Yeah, I'm doing this. I'm dipping and dabbing. I'm doing it. Again, you were framed, quote unquote, doing it part-time, but you were acting as if it was your full-time job. So you just, you put your eggs into that basket and, look at you now. So, I mean, props to you from that standpoint. Sure. But when you say perspective as far as real estate, it's not so much, the market is the market. I always say that. I mean, the market is going to be what it is. And you got to just operate within the guidelines of that market from that standpoint. And right now, when you say, hey, it's not as high as it was, well, it depends on your price point. And it really depends on who you are, right? Because I know folks that are plenty busy right now. Yeah. And plenty busy because, they save money, right? They got great income, they got good assets, and they got credit. So they fine. They can operate in this market. Right. And as long as you have those foundational things just are within you, then you'll be able to operate in the market, right? I think too many times where, now we're trying to figure out, how to fit into something as opposed to just allowing it to be what it is, and I'm going to operate in it, right? So just take, for example, like you said, hey, you got a market, you got price points, and the price point can be X. Well, because of the interest rates have risen, I don't want to pay that. Well, that's not necessarily perspective. That's necessarily priority, or that's your intuitive situation of how you feel, right? I don't want to pay $2,700 for a mortgage payment. I feel more comfortable paying $2,000. Okay, well, now you have to really adjust your purchase price to say, okay, what does $2,000 look like? As opposed to maybe you need to look at all of your bills and say, well, what bill can I eliminate that'll help me be able to absorb that extra $700 a month so I can buy the house that I want, right? To your point, perspective, as opposed to you saying, okay, well, I can't afford $350,000 or $330,000, so I'm just going to drop down and do $220,000, knowing that you're not, maybe that $220,000 house is not going to be the house for you, or that's going to have to be a house that you're going to have to get additional loans to help fix the house up and things of that sort. And so all of a sudden you're diving into a whole nother lane that you don't have no expertise in. Right. And so to your point about perspective, it's also understanding how much of this business am I really putting myself into to know about, right? I'm not the smartest person in the room. I'm not. And I love not being the smartest person in the room, because if I am the smartest person in the room, then I mean I need to find another room. If I need to find another room, right? So again, like for me, if I don't know something, then I don't necessarily have to be the person that know it, but I know where to go find the answer. That's perspective, right? Being able to go find it and knowing exactly where I can go get it at, as opposed to thinking that I got to be the one that knows it all and got to be doing it all and things of that sort. So to your point, yes, you got the market where interest rates were lower. Yes, they were, ladies and gentlemen, right? Home prices, though, however, were higher, right? And they were higher. Now, home prices are still kind of where they've been, but they have adjusted. They have adjusted a bit. I just saw the other day where an agent, a realtor, a listing agent, had a house that was listed for $415,000. 3 weeks ago, it was listed. It's funny how it's kind of funny, but it was listed for $415,000, and they reduced it all the way down to $365,000.
Did you see that a couple months ago?
No.
That's what I'm saying as far as perspective.
Right.
So a person's perspective can be, I'm going to buy low.
Right.
Even though the interest rate is higher, I'm going to buy low and I'm going to refinance.
But also taking that same account, and I won't call that realtor out, but I mean, from 410 to 365, I'm thinking that you were priced wrong. I ain't seen you do that yet.
No.
I've been asking about that house up in Salisbury yet, Ed. Right? I ain't asked that yet. Y'all ain't dropped it like that.
Nah.
Because y'all have it priced where it needs to be priced, right? We just talked a couple weeks ago. Well, we was talking to our friend Kenny Williams about appraisals and all that kind of stuff. So those are the things that are happening. And you looking around, we got the answer attacking.
We good.
Cool. But the thing is, you going from 410 to 365. Maybe you weren't priced correctly. That's a $45,000 jump.
Right. I believe that, and sometimes it may be when the agent goes in there and we advise on what the value should be to list the price. Sometimes the sellers don't want to hear that. They don't want. They think like if we think it should be priced at $369, sometimes no, 420, because I know a couple of months ago or 6 months ago my neighbor was able to get 430, so I know I can get 420. So sometimes it can be the seller not listening to the listing agent. So I don't know if that was the case or not, but a lot of times, they have personal ties to the house.
Right.
So sometimes a seller is thinking that it's worth more than what it actually is.
Yeah.
And that's the reason why we have like Kenny or appraiser
right
come out so you can see what the
it
value is.
Right. And so going back to, thinking about the word perspective and what is perspective, because everybody has one. And perspectives, can be your own individual perception, right, on what you feeling. Then you have the perspective of what the truth is, outside third party, right? You got outside third party, you got the truth, like this is facts. That's the perspective. Then you got your own personal. And so I think you drummed it up when you said, hey, in the beginning, just a few months ago, you had to take a market where a house was highest and best. A house was, the demand for homes were higher, right? So with the demand of the house being higher, it was going on and doing something else that it had to be from a perspective standpoint. So when that's not happening, when that's not happening, you come back and you frame up and you say, all right, time out, guys. Let's back up. Perspective. We know the demand is high, and everybody's flocking on it, right? Well, your perspective could have been, do I need to jump in right now, or do I need to wait till things kind of calm down? Because I remember everybody was saying, well, when is it going to be a buyer's market? Right? When is that buyer's market going to come in so it can be? Well, some would argue, could say, well, now it's more of a buyer's market, but now on the flip side of that, you have increased interest rates, right? So now you have increased interest rates, which will change now your buying power.
Right.
And now your buying power has changed just on the standpoint of it's not the same as it was last July. So last July, or even let's call it last November or whatever. So it's not the same. So now you got to start looking at it from a standpoint of, okay, if it's not the same where I had to go highest and best, or I had to, withdraw money from my retirement account just to be in the play to be, able to submit an offer, right?
Right.
That's not now. Now is the time that you say, I'm going to take the same amount because I know what my bottom line number needs to be, and how do I get that bottom line number to fit into my budget? Right. How I do that is that, why, to your point, perspective, why are you not using the same aggressive tactics that you were to get into this whole market just to have a piece of it, to now say, you know what, you got what you want, and so now you could take that same, $40,000 in due diligence. Well, you don't have to put it down $40,000 in due diligence. Now you can take $40,000 and put it down as your down payment on your house. Or you can, like you said, there's ways to, that you look at the buy downs of interest rates, the temporary buy downs of interest rates, the whole magnitude of whatever. But it's all about perspective of how bad do you want to be a home buyer.
And even at 2% and 3%, people were still having challenges on finding houses because they were getting outbidded by investors. And I knew of clients that were going $20,000 and $30,000 over the asking price, and still got outbidded, and was still riding around for about a year looking for a house.
Right.
You know what I'm saying? Right. So that's That's what I'm saying. So it was 2-3%, but they couldn't lock in. You know, I'm about to go lock in on that. You can't lock in on a rate until you get a contract.
Say that again.
You cannot lock in on your rate until you have a contract.
You have a contract. So what some of the programs that lenders did introduce during this hot time of the market, where they say, you know what, we'll allow you to do something called lock and look. Lock and look. Hey, you want to lock and look? Hey, come get approved, and we'll allow you to lock and look, right? So what lock and look did, Ed, right? Lock and look allowed you to say, okay, I'm pre-approved. I'm gonna go ahead and lock in my interest rate, but I'm only gonna be able to lock in that interest rate for the next 90 days. Now, but in order for me to lock in that interest rate, not just my word. No, I need some money. I need you to say, okay, I'm gonna buy this $500,000 house. I need you to put down 1%. So I need you to go ahead and run me that $5,000, put it in my hand, make it out to my company, and for the next 90 days, I'm going to lock in your interest rate right now today, right? So you can lock in, and so that you can start looking. And you are basically betting that, guess what? I'm going to find a house within the next 90 days. Now tell me what happens if you find a house within 90 days. You ask? Okay, I'll tell you. So if you find a house within 90 days, that means you're locked in. So you're locked in at 4.5%. You're locked in at 4.875. You are locked in for 90 days, right? You go get your contract. You come back. We locked in. We rocking and rolling. You put your $5,000. Oh, that $5,000 that I was going towards your closing costs. Go ahead. Yep, you're going towards your down payment. It's all whatever you want to go towards is going towards, right? It's going to be a credit to you. But what was happening during that lock and look period? Well, why was we locking and looking? Because you were looking, but you were getting outbid. And when you were getting outbid, what was happening? You were just going on to the next house, or on to the next house, or on to the next one, or whatever the case may be. So let's just say you come back to me 91 days later, 92 days later, after you done gave me that $5,000 check for your lock and look period. I told you only had 90 days, but you came back on the 91st day. Guess what happened to that $5,000? Gone. Like the wind. Like the wind.
Yeah.
That $5,000 there's no credit to give you, because guess what? We are no longer what? We are no longer locked in. We're not locked into anything. So again, and again, was it a gimmick? No, it was more of an incentive to get you really off of your behind and into the streets of looking for a home and being aggressive with what? Your offers.
Right.
Because people were being super, super aggressive with that offer.
Right.
Now, why are you not being super aggressive in an offer right now? Well, because, like you said, the rates have gone up. Things have changed. Now, ladies and gentlemen, I want to give you a real quick one, right? Because you heard it. I saw people, everybody's reporting news and all that kind of stuff. I mean, it's kind of interesting. But the thing was, over the past several days, right, the market did a complete almost, when you say 180, you can say 180 from the day before. But the market improved by 200 basis points. What does that mean? That means that the interest rates, yes, they did a quick look back. They did a quick look back the other day. So I would liken it to saying that the rates were probably some more so around wherever they were around October 1st of this year. So give you an example. Same example that we talked the other day. The industry average on the conventional rate, the rate was 7.25%, right? That was the average, U.S. average, right? For a conventional 30-year fixed mortgage, 800 plus credit score. I'm putting 20% down. 7.25% was my average interest rate. That same client, that same loan program, after the 200 basis points drop, right? No, the rates weren't at 5%. I wish they were. No, they weren't. But they were around 6.675. They were around 6.5. Somewhere around there, they were trading around. Now, it's going to be interesting what they are when the market opens up this week, and we're going to see exactly how inflation has improved.
Has that helped a lot of your clients? With that drop?
In the interim, yeah, it helped a lot of people.
Yeah,
it helped a ton of people, right? No, it helped. I would say it helped a whole lot of people because people were able to all right, let me get off the fence, let me just join, let me go ahead and lock now.
Right.
So it helped them. Yes, did it help? Absolutely. But at the same time, we're going to see exactly if it's sustainable. Is everything that the government has been doing over the last several months, with regards to increasing the federal rate, trying to suspend consumer spending and things of that sort, is it working? First, to show it the other day, yeah, it showed something. But also, you know what happened the other day too? We had an election. It's funny how that all works together, right? It all coincides. The day we got an election, the same day that we got a 200 basis point swing. I'm just saying, guys.
So when
wake up.
And I know nobody really knows, and I know you're gonna say that. But when do you think that the rates are gonna? I don't think it's gonna go down to 2 or 3%. I don't know when we'll ever see that. But when do you think it'll get lower? In your opinion, when do you think the rates are gonna? I'm hearing different things. I'm hearing first quarter of next year. I'm hearing the end of next year. I'm hearing a lot of different things. When do you think they're gonna go down? Personally.
So,
and this is just an opinion because no one knows.
Right.
So
no
I'm
one
just
knows.
gonna put that out there.
So I think we'll start seeing continuous improvement on the market and mortgage interest rates through 2023. I know that sounds very vague, ladies and gentlemen, but to be honest with you, if I'm being a heavy optimist, let me answer it this way, Ed. If I'm being a heavy optimist, I would say first quarter of 2023 we'll see rates coming down, to that 5.5, 5.875% mark. If I'm being, I wouldn't call it a pessimist. I would call it more of a realist. I would say more around like July, August of next year, you'll see that 5.5, 5.875% interest rate. I also believe that when rates do get, and that's on a 30-year fixed mortgage, that's on a conventional FHA, will probably be 0.5%, somewhere between 0.75 to 0.5% lower and things of that sort. But what I'm saying is that I think that when rates do get to those marks, I think we'll be there for a while.
Yeah.
So I think that that'll be the new normal. I think that's what the normal will be, where you're in that 5% range, somewhere in that mark with regards to rates and stuff like that. That's what I think.
And then whenever it does flip, then that's when I feel like you already know the sellers are going to be conservative again, and then it's going to be back to the highest and best and all that. So it's like, who was that? I think it was you or someone that said, choose your heart.
Yeah.
You know what I'm saying?
Yeah.
Because once that switch does flip, then, sellers may not be so apt to pay closing costs and do different things or reduce the price. So you can't have it both ways.
Right. No, you
I
can't.
wish we could. Like, yeah. I'm not, but it's.
Yeah,
that's not.
I wish we could. But the thing is, that's why we keep saying that everything's negotiable. Ladies and gentlemen, everything's negotiable.
Yeah.
It's negotiable. It's not that a seller wasn't willing to pay closing costs last year at this time.
They didn't have to. Nah.
Right. So you could ask and they would say no, because I got 30 other people just like you that want to buy my house.
Or not respond at all.
Right.
Yeah.
Yeah, which is kind of hard. Right. That's hard. He didn't just respond.
Most of them just did not respond.
Yeah. But it wasn't the seller. It was the agent.
Yeah.
Right. It wasn't the seller. It was the agent.
Yeah.
Yeah. What are those agents doing today?
Hey, I just wanted to call and reach out to you to see. I saw you my listing at 123 Main Street. What did your client think about it?
That's what they're doing now.
Yeah, that's what they do.
Yeah.
Yeah.
You gotta be consistent, man.
Yeah.
You gotta be consistent. Because I remember, I'm that kind of guy.
And builders too?
I write your name down.
Builders too?
Yeah, before they wasn't even what they was doing.
Highest and best by tomorrow at 2:00.
What they doing now?
Hey, I'm just calling to see how you doing. You need some water? How's your wife? She's pretty. They love us now.
Totally flipped the script.
Yeah.
Flip the switch.
So perspective, even if you're not ready, so a person can look at that and be like, you know what, I ain't gonna never get no house. These people ain't gonna give me no house.
Right.
Or you could look at it like, what did the lender tell me? I need to work on all of this. I need to save some money. And you can get a house. It's just not right now, but you have work to do.
Yeah.
So that's perspective. Perspective is not necessarily just because I can't get a house now that I can't get a house.
Correct.
It's just that I need to work on some things before I'm able to buy. And when I say perspective, I'm not talking about other people's perspective.
It's about yours.
Because other people's perspective that's their story. That's their life. That's what they experience.
Right. Your
own perspective.
Yeah. So the other day I got a mortgage application, and I thought it was a joke. I'm lying to you, Ed. I thought it was a joke. Right. Application was complete and filled out in its entirety. I appreciate it. That part was excellent. When I sat down and started reviewing the application, the first thing people say, what's the first thing you look at? What do you think the first thing I look at?
Credit score.
Great. I'm glad you said that.
Yeah.
Actually, no. First thing I look at is your assets. Your assets tell me what's going on today versus your credit score.
Gotcha.
Credit scores is just a depiction of over the last several months, over the last week, whatever, last 30 days.
Mm-hmm.
But your assets is going to tell the story of how you live. Well, I looked at the assets and they had negative $700 in the account.
Mm.
Negative $700. I was like, all right, where are we going here? I looked at the income. The income was whatever. I mean, nothing crazy, but nothing bad. But it was what it was. About $60,000, $70,000 a year. That's what they made in income. But the assets, and I'm like, all right. So then I'm like, well, there ain't really no reason to pull the credit because I already know what you're doing. I already know what the credit's gonna look like if you got negative money in your bank account, right? And of course it did. But for someone who's doing that, I'm assuming you're doing it because you want to know where to start.
Right.
And for that situation, I would say, where do you start? You got to start off first. We got to get out of negative on our bank statements. Because we're in the negative. That means after 30 days and you work every day, you got negative $700 in your bank. So if you got negative money in your bank, I'm not even saying zero, but negative, your goal is to get to zero.
Right.
Right. So we got negative $700. Our goal is to get to zero. Because if we get to zero, then we can start building from there. But let's look in those bank statements and what are the things that are driving you negative?
Yeah.
What's driving me negative? What bills are so outstanding that they are more than what the income that I bring in?
And it could be spending habits. It could be how much you're making. So you may need to change jobs.
You may need to get an extra job.
Yeah.
Not even change jobs. This person made about $67,000 a year, so maybe you need to get another job.
Right.
Right. I was sitting in the line the other day. There's tons of jobs out here. I shout out to Dick's. I was in Dick's the other day, just trying to get a couple items here, for the kids and all that kind of stuff. Yep, I shop at Dick's. I don't have to go to Foot Locker. I can go to Dick's. Go right here, get them a couple items, and there wasn't a lot of people on the floor that were working.
Right.
So guess what? Dick's is hiring.
Yeah.
Free plug. So those are the things that you got to start looking at and saying, how do I improve myself? But first thing, you got to start improving ourselves from a perspective standpoint. We got to have some type of savings. I don't care if it's zero. If every month you go from paying my bills every month and I got zero, well, we can work off of that.
Right.
Because we can build from there. It's kind of hard to build if I'm already in the negative. So the goal would be to get to zero. The other part of the perspective is, like you just said, maybe, okay, if my income's not enough. So then let me sit down and let me say, okay, maybe I need to get another job. I know 911 dispatch. I know they hiring. Yeah. They need people. You ain't even got to go nowhere. But they can send the equipment to your house and have you log in and you can be right at home. 911, how can I help you?
I think it's cool for them to, well, sometimes they just don't know what they need to do to get a house. So to call an agent or somebody and get a quick reference as far as what I need to do. Because even if they need to get another job, if you get another job, that's not going to be counted. Mm-hmm. Unless you've been working there for at least 2 years. Yeah. So if they bounce that, if they talk to me or somebody on my team or you, we can have that conversation and just kind of let you know what you need to do. So
and because you can take that same person who had negative 700. Yeah. I'll tell you about a person who had a positive 70,000. They had a positive 70,000 in the bank. I'm looking at the assets and all that good stuff. But you know what's the first thing they think what they tell me? What's the first thing they tell me when they got money in the bank? What's the first thing they tell me?
Oh, I'm good. Everything is good. You can.
Yeah, or they say, you know what they say? I'm not using that money to pay no money down. Yeah. So that's perspective, right?
Right.
You got it, but you tell me, well, I'm not putting that down. Yeah. So we'll be buying. Yeah. So again, all different perspectives, all different ways to look at it, man. One thing I encourage you guys. I know that we had some technical difficulties with the show, man. Be sure that you download on Podbean. We put a lot of information. We put a lot of time, blood, sweat, and energy into our engineers and all that kind of stuff. So
thank you.
Download that Podbean, and they make sure that we rock and rolling and we hear and that we pushing forward. So another great show, Ed.
Another great one.
Man, I strongly suggest that y'all be locking in and ready to rock and roll these next couple Sundays, because we got something hot for you, man. I promise you. I promise you. We got a gift for you.
Absolutely.
We got a gift. So Ed, they can reach me at area code 215-280-2294. Area code 215-280-2294. How about you, big homie?
They can reach me at 678-761-5198, or they can also hit me up on all social media platforms under Ed, the rapping real estate agent, or the Averhome Group.
Yes, man. Yeah. Great show, brother.
Great show, man.
Hey, shout out to the Godfather, Mr. Sean Langston, man. I appreciate you, brother. Thank you for the heads up and the update and all that good stuff. Even during the live show, we appreciate you, homie.
Yes, sir. Yes, sir.
All right.
Love. Great show.
Yeah, peace.